You know, it's all about rates. That's what we're certainly focused on. You got the 10-year, as I look at it now, at 167. Are we at the beginning of a more dramatic move higher, do you think?
Well, I think right now we've seen a little bit of a snapback, and the forward curve is pricing in more of an increase in the belly of the curve. The 2-year and the 5-year have moved up. So we'll see. I think over time, as the Fed starts to reduce the quantitative easing in bond purchases, we should start to see the longer end of the curve start to pick up a bit.
I mean, a lot of this has to do with, as we said in the introduction, the renomination of Jay Powell and the expectation that you may get a faster taper, you may get a quicker rate hike. Is that your anticipation as well? What's your reaction to the renomination?
Well, I think it's a great move. I think Governor Powell's been certainly battle tested, and he did a great job in deploying all the tools of the Fed to help the economy and the country get through the pandemic. So, and I think he has the courage to raise rates when he wants to. It's a very nuanced decision about when to move and how aggressively to move. And you don't want to go too early and choke off the recovery, but you don't want to wait with inflation as high as it is and get behind the curve. So I think he's been a good consensus builder, and he will have the courage to act when it's right to and appropriate to act.
I wanted to ask you about the other issue here in Powell's renomination, and that is regulation. There's still that spot for vice chair of supervision, and there's some discussion that President Biden may turn to a tougher on banks type of regulator for that role. What are your expectations?
Well, we'll see. I also think that under Chairman Powell and Randy Quarles, there was a recalibration initially after the great financial recession. The pendulum swung a little too far in terms of reforms, and they helped to bring that back. So we had a focus on growth, but also keeping the system safe and sound. It doesn't appear to me, from where I sit, that we need to make drastic changes to that overall framework has served us well through the pandemic period, and banks came through that. This time they were part of the solution as opposed to part of the problem during the Great Recession. So I think banks have plenty of capital. I think they're very focused on doing well by their customers. And so hopefully when the appointment is made, that's taken into account.
Well, one question out there is M&A and whether they're going to continue to greenlight these deals. You have been on quite a buying spree. I think 4 deals in 2021. Is that window closing?
We'll see how that plays out. I'd say, look, in terms of acquisitions of banks, right now, there's opportunities to continue to consolidate. The drivers of consolidation are still there. Smaller banks have to invest more heavily in technology and digital, and they're contending with an environment that makes it hard to grow. So I think there's still a need for consolidation. We'd like to continue to play there. I think at the smaller end of the market, you'll continue to see deals. The big question is, will a new appointee back away from the bigger deals in terms of moving banks up into that category of $500 billion to $1 trillion. I don't think we need to get there. I think we continue to do bolt-on fee-based acquisitions like wealth management and M&A firms, maybe do the selective bank acquisition to continue to get more scale. And I don't think that introduces any further systemic risk into the financial landscape.
Let me ask you finally, since we talked about Jay Powell and Sarah asked you about the prospects of increased regulation, had Brainerd been the person that the president nominated, what would your reaction be today? Because there was some suggestion that had it been her, that she would be tougher on your sector.
Yeah, I have a lot of respect for her. So she's very sharp, and she has taken an opposition view sometimes to some of the consolidation that's taking place. But again, I think the transactions with banks that are under $250 billion in size, that we fall into that category, I'm not sure she would take a different view than what the prevailing view has been. So again, she may have been tougher on some of the larger transactions. She certainly has an orientation around climate and views that as a serious risk for the banking system. So there's some things that she may have done differently than whoever is ultimately appointed. But again, she's been very sharp, and she's been a good person to work with over time.